Good afternoon, Scott here. Great to meet you in person. Today I'm going to discuss HELOCs and kind of just in general how they work. We've been getting a ton of calls from clients over the past few months in regards to home equity lines of credits, and there's their suggestions and ideas on how they work. So we just wanted to give you a little education on how they work. Now, basically, the definition of a HELOC is a home equity line of credit. And that HELOC is a second trust deed on your property. So it will be a secondary lien on your title if you decide to, take advantage of some type of home equity line of credit product. Now, the majority of HELOCs are variable rate products, which basically is, what it sounds like. As interest rates go up, your HELOC payment will also go up. They typically adjust on a monthly basis, so you can see big swings from one month to another. And you typically only pay interest. So as an example, just to kind of give you a numbers example, if you were to owe, let's say $250,000 on a home equity line of credit and your interest rate is 6%, your payment would be around $1,250 a month. Okay. Now, if the Fed raised rates that month and next month, your bank could then adjust your payment. And let's say they do adjust your payment up to 8%. Well, then that means your payment would adjust to $1,666 a month in 1 month time. So keep in mind that both of those situations, when you make your payment, is interest only. And so even though your payment went up, let's say $400, you're only paying that towards interest, meaning you're never going to pay down that principal balance. So you just want to be, kind of careful of those. And that kind of ties into the next segue here, which is kind of just the overall pros and cons of a home equity line of credit. Now, pros are if you have a super low interest rate on your primary mortgage, your first, you won't have to touch it. Now, I know a lot of people, that's their biggest concern. They've been able to take advantage of record low interest rates over the last few years, and they don't want to hinder that interest rate, that payment. So the HELOC does give you a good option to access your equity without having to touch that primary first rate. It's also a great security blanket for emergencies, and it's tied to the equity in your home. Now, personally, and this is something my Aunt Stephanie has been saying for years, she taught me, Jordan, Jill, all of us, that the best way to utilize a home equity line of credit is for emergency purposes. We would love to see every single one of you have a home equity line of credit that sits at a zero balance. That is the best way and the most ideal way to take advantage of a home equity line of credit, because you're having it at zero, but you have that security blanket that's tied to your home. So, with that being said, another couple pros is the low initial payment option. So home equity line of credits do allow low initial payment options in what's called, and they are able to provide that through what's called teaser rates, which is basically like a marketing interest rate that they will give a client for the first year when they start their brand new HELOC process. And you're fixed for that first year, and then it can schedule to adjust on a variable rate monthly basis from there on. So with that being said, if your plan is to, let's say, pay something, put it on the home equity line of credit, take advantage of that low teaser rate, and you have a great plan to pay off that balance within the first year before that payment is scheduled to adjust, then this is a great product for you. In addition, the low payment options come from the interest-only products, which are the typical way that they calculate the payments on home equity line of credit. So it does make it, very affordable. However, you aren't not paying anything towards, the principal balance, meaning that balance is going to continue to either accumulate if you keep to utilize that home equity line of credit, or it'll just never go down and you're going to be stuck with a large balance, forever. So typically, another pro is that the HELOC has much lower interest rates than credit cards and unsecured debt. So it is a great option if you need to utilize it for whatever reason. We would not ever recommend you to go, $60,000 on a credit card, $60,000 on a personal loan where your interest rate is going to be, anywhere from 10 to 20%. The HELOC is, even though it's variable rate loan, it is going to be much more manageable on the interest rate side of things. So it is a good option for, something that you might need for low balance, short-term loan needs, so to speak. And then the last pro is, if you have plans, like I said earlier, if you have plans to pay off the HELOC balance quickly, so let's say you need $10,000, $15,000 and you're like, hey, Scott, I could pay that off in a year, then a HELOC is a great option for you. It's when you start getting larger balances where you're not going to pay off $250,000 as quick as $15,000. So you're going to be way more susceptible to get those variable rates as the market changes, and that could potentially get you in trouble. So like I said, to go back to the pro, if you have a short-term loan need and or a low balance loan need, then the HELOC is a great product for you. Now, some of the cons of a HELOC, the number one is it's a variable rate loan, meaning that your payment can and will fluctuate. Another con is you don't pay principal unless you yourself add the additional principal. So, that could just keep that balance high time over time, year over year, until the bank will call for it to be re-amortized, and then your payment will adjust drastically. So unless you have the ability and to basically pay extra towards principal, you can get in trouble on those. So that's one con of the home equity line of credit. Now, another one is the tax deductions are very limited on the interest that you pay. So make sure you consult a tax professional, because we do know that they took away a lot of the interest deductions for home equity line of credit payments. So make sure if that's something, well, yeah, Scott, but at least I get to deduct the interest. Well, that might not necessarily be the case anymore. So make sure that you consult your tax professional. Now your primary mortgage, that interest is always a tax deduction. So it's that second home equity line of credit tax or interest that you pay that might not be a tax deduction. So definitely make sure you check on that. And then, basically, like I said earlier, interest only loans can be very affordable until they re-amortize over the agreed, term with the bank. Now, typically it's like a 10 and 10. So you have 10 years to draw off on the home equity line of credit. Your payment is an interest only for those 10 years. It still adjusts. So if the rates go up, that payment will still go up. And then at that 10-year mark, they'll freeze the home equity line of credit. And then whatever your balance is, they amortize it like a normal loan over the next 10 years. So when you look at a 10-year loan on a $250,000 balance, that's a very substantial payment once you factor in principal, interest, and the fact that the interest rate can still adjust moving forward as well. So just be very wary. The biggest thing, guys, is, 2008, 2014, we saw so many people lose their homes due to these types of products, and we're starting to see them come out again. Now, they're not necessarily bad products, but we just want everybody to be 100% educated on making the right, proper decision when it comes to your finances, it comes to your home, and it comes to your financial well-being. So, just make sure that you truly understand, the products before you run any large balances on them. And, we're not here to knock HELOCs. We don't offer them, but call us if you're interested, because we have plethora of resources for home equity lines of credits that we can put you in touch with. Ones that we've actually personally done ourselves, or other clients of ours that have taken advantage of them. We have a plethora of resources, and we understand how they work in and out. So never hesitate to pick up the phone and call us. We're always a resource for you. And we always just want to make sure our number one goal is always to make sure that you guys are making the best financial decisions. And we're here, to help you through that. So make sure to pick up the phone. If you have any questions in regards to HELOCs, we'd love to talk to you and, hopefully give you some advice. So anyways, that's basically the gist of HELOC. So I hope to hear from you soon, and have a great rest of your day. Take care.